Hi everyone, this is Tommy Lackey with Power Investing, and this is the weekly power sector review video where we take a look at all of the sector and subsectors and try to figure out where the strength and weakness is in the markets as of right now. So let's go ahead and get started. The first thing we're going to do is take a step back to the sector ETF RS rankings and look through the three lists that we looked through in our macro review. The first is the market weight, and what we noted was that only two of these sectors were positive: consumer staples and then materials. And materials only by a little bit on the market weighted. When we go to equal weighted, we get only one sector positive, being consumer staples, all the rest negative. And then we go down to small caps, and all of a sudden we have, of the 10 here, because there's only 10 in this one, not 11, communication services and utilities are combined, we have 3 that are negative, so 7 that are positive. So this definitely showed us that there was some more positive action in the small caps this week over the large caps. As we move over to our universe page to take a look at our equal weight sector rankings, you can see that the energy and materials are still on top, financials, consumer staples, utilities. So still weighted heavily towards the defensive nature and even more towards the inflation side of that, with energy and materials up top this week. But something I think we certainly need to note is that even with energy still at the top of the RS rankings, as far as weekly performance, when we sort them that way, it's second to last behind healthcare. Healthcare continues to get beat up here, but energy, being our strong point, has kind of rolled over. So this is a question: is this the kind of the generals, the final stand of the strength, or are we starting to see that money rotate into some other areas? And as you can see, materials up 1.21% this week, took a decent amount. Industrials, a more cyclical sector, came up as well, maybe some with the airline situation and some of the defense. And then real estate, after having a pretty tough time, showed some positive action this week as well. So from a sector standpoint, it was still, relative strength from a defensive standpoint, but from a stance of what actually performed for the week, materials, industrials, real estate, utilities were our only 4 that were positive on our indexes. Now, when we look down at the equal weight subsectors, before we get into looking at some of these sectors, the first thing we want to see here is, again, industrial metals, are still our top sector, or moved up to our top sector, and basically was up about 1.7% on the week. Oil and gas, again, still the rankings there, but I think we're better suited by sorting by performance, which precious metals was on top, then independent power, renewables, industrial goods. Semiconductors was the number 4 performance for the week. Construction materials, industrial metals, retail, REITs, automobile, transportation. So some of these areas that are stronger sectors and some things that are not. You've got a lot of pink and orange and red in here that are showing that the performance for the week took some of the areas that had been getting beaten up. And you sort by the RS movers as well, which I've done in the blog for you to see both of these next to each other. You still have some of the green here, but you have a lot of orange and a lot of yellow in here, so a lot of areas that are moving up into that midsection and might be worth a look if we do get some change in character in the markets. But when we move back up here to our sector, let's just take a look at a few of the things that we want to review here. Since materials was the performer, let's start with materials here and take a look at its equal weight index and its relative strength chart. If we take a look at the RSI chart here, you can see as we pull back, this has been in a base and it never really lost the lows of this base and is now working back up towards the highs in a new bull range. Now, we've seen a lot of moves above the bull range, down below the bear range area, back above. So this may be different, or we may just get rolled back down here with the markets as a whole. But looking for a breakout over 10 on this is something to keep an eye on materials. Now, when we look down to the breadth, it's definitely outperforming the markets with 68% above the 20-day moving average and 53% above the 200-day. And its summation index from an intermediate standpoint has turned up, and during the mess we've seen, its McClellan summation or oscillator has stayed above 0 as well. Pulling on down to the relative comparatives, it's pretty easy to see that its comparatives across all the different measures we have are all moving higher. during this. Again, it's just not losing. It's moving up some, but even the last couple of days, it continued to move up because it didn't lose as much as the rest of the markets while things were happening. And it's not seeing nearly the new lows that we saw in the major indexes over the last. It's having lower amounts of new lows as we go by as opposed to higher. Good area to take a look at. Again, industrial metals and precious metals are your two strong spots here. Basic materials next, and then chemicals was not able to put together a positive week, but these others all well outperformed. Actually, all of them outperformed the markets as a whole. From an ETF standpoint, in this particular sector, XME is on top. And when we look at XME, not only is it on top, it is a scenario to where it just recently broke out, and for a lot of people this is too far, but if you are someone who's looking at a longer term standpoint, this weekly setup here and this weekly breakout, however, just moving RSI above 60 could be a strong move. It'd be great to see a back test down here to say 47.50 area or so, but I'm not sure I would count on it. I'd watch how these next few days go and see. I mean, if the inflation play does cool off, this will likely cool off with it. But if it doesn't, this could continue to run out of such a large weekly base that we see here. Moving back to, looking at some of these others, you definitely have your GDX. I've got a whole list going into our ETF, weekly ETF sheet that'll come out that has quite a few of these names on here because obviously it's one of those sector performers. Now, to be fair, a couple of weekdays does not take energy out of the leadership position that it's been in. As you can see here in the RSI chart, it's already broken out as a whole sector on our equal weight stance, and it might be back testing now. So that's what we'd look at for now. It's in an RSI bull range. We've had a couple of divergences. So again, if the inflation rhetoric cools, we could see this come on down. Would not surprise me a bit if this overshot the back test as well, because a lot of times in commodities they can have pretty sharp moves in both directions, and this could pull its way back into these MA bands or maybe down towards the bottom end of it, and we'll see if it can find some buyers in those areas. From a breadth standpoint, it's still pretty strong, but we're starting to see some stuff roll over here. Still strong comparing to all the other sectors, so it's nothing to really write home about. Now, one thing we talked about was the McClellan summation moving back above zero finally, and it looks like it may not want to do that on this particular try. We got a cross down this week as well, which is an intermediate sell signal, especially being below zero. Now, when we go on down to the relative comps, this is something we have to realize they're all still up. Now, they're starting to get a lot more volatile up here on these comparatives, and they're starting to bounce, and actually we saw some lower highs this week. A slight divergence. And then here at the very end of the week, we finally started to see a few new 10-day lows popping up. So this is extremely early, and we're not saying this is a major rollover, but it might be something to give it a little time and see if it sets up again for better opportunities. As you can see here on the subsectors, oil and gas services has moved its way up top by basically being the least loser, not really gaining on the week, but losing the least. But over the last month, it is up by far the strongest. Last quarter, it and oil and gas exploration production are right there with each other. Looking in the ETF standpoint, again, these might need a little bit of time to set back up, but there's quite a few in here that are on the performance list. I would certainly go through here and look closer. Just clicking quickly on OIH, you can take a quick look at the daily and weekly here, and as you can see here, on this weekly chart, it's got a long way to go to build back up to where it was just in 2019. And we're right here at a big volume shelf on this weekly area. That's why it might take us a minute to get through here. And as you can see, we've had a pretty good run, and we're getting some divergence here in RSI. But a pullback down here that holds this bull range could give us a great another shot with oil services. And, I'd love to see it down here in the 220 area, somewhere in that range. Now, that's almost a 10% pullback. So we may not get that far, but it'd be nice to get an idea of where it finds traction between here and there. Now, when we move to our next sector, I want to take a quick look at consumer staples, because consumer staples has been an area that has been strong, and then it kind of weakened a little bit, and now this week it held up very well. It didn't really make a lot of headway on the RS relative strength. I mean, it didn't make a move. Nothing in the top half really did. But as you can see here, it's holding on pretty well. what we want to note here is it was one of the ones that was positive in the market weighted ETF and in the equal weight ETF. So there is some action going on over here, under here. And as you can see, the breadth is outperforming the overall markets, but the summation is just having a hard time turning up and kicking in here. And we want to see that before we see this as a sector that's really coming back into play. It's basically, if it does come back into play, then that's a defensive signal that we need to be cautious about. As you can see here, its relative strength has been sideways for a while on this bounce and trying to turn back up here. We're gonna have to see if it continues on that. It is showing less new lows on the new high, new lows. I'm sorry, the percent making new highs and new lows, showing less new lows than some of the other sectors as well. So its defensive nature is kicking in here. Now, when we take a look at our overall subsectors here, food and staple retailing's on top with basically a flat week. Household products, and then food and beverage and tobacco were the worst performers on the week. Now, again, that's the equal weight subsector. On the ETFs in this particular area, I'm not going to jump into any of them, but this is an area you can come in and see kind of who was able to turn in some performance. China Staples did. I don't think that's where I'd want to go, but there are some other opportunities in here. XLP, really the chart didn't look that bad at all when I was glancing at it myself. See if it pulls up here quickly. Yeah, as you can see, we were in a pullback here. It kind of made a second come down, higher RSI here with a higher low. We just want to see if it breaks the downtrend line here and moves its way into another leg. The weekly is in a strong RSI bull trend. Nothing here is overly concerning from a market standpoint. Finally, let's round this out looking at a few quick subsectors, starting with precious metals being one of the top performers the last couple of weeks. As you can see here, its RS is just starting to move up the ladder. The shorter terms are up towards the highs, and the longer terms just now starting to curl after spending a lot of time in no man's land down at the bottom, all three. So after this big downtrend here, we're starting to see some life back in this particular area. Moving down, the breadth looks pretty strong compared to the markets, especially on the short-term basis. And finally, the relative comparatives, as we back this off a little bit, are all turning up from longer-term flats. This is an area that could continue to run, but it also had big moves the last 2 weeks, so we want to see if some of these will set up again. You can always come down to our precious metal rankings, take a look at the particular ones. Now, next is industrial metals. Again, relative strength is strong, and as opposed to the flat line of the precious metals, this one's been strong long-term on this black, which is the 12-month, the whole time. It's just its intermediate term weakened during this base and has moved its way back up. Now, one thing I do want to note, this one's already broken out and can probably keep moving for a while, but one thing I did want to note was notice this big pullback after the breakout that came back and did a deep back test. Not came back to the breakout, but came back in the middle of the range. That's what I'm kind of wondering if can happen in energy if we do start to see some of those spaces pull back. But for right now, industrial metals is looking strong. I actually trust it a little more than I do precious metals, but precious metals are coming off a lower trough. And then finally, food and staples retailing is another one that caught my eye because this base continues to move sideways. If we zoom back out a little bit, you can see it held up pretty well this week. And it's right here at the RSI bull range shift. Now, if we can move back out of this here, it'd be a nice strong signal that food and staples retailing could continue to improve here, and it is what was one of the mover sectors this week. 86% above the 20-day moving average, and the 50 and 200-day are both above the markets as a whole, the universe, and the summation is turned up and trying to cross above zero. So some of the staples areas might still want an eye, but it may not be the food, beverage, and tobacco that we've seen move well recently. It may be the retailing trying to start working its way back in, and the household durables. But notice here the relative comparative here in this food and staples retailing has been strong and remains strong. So does the number of new lows is just not there. So taking a look at some of these areas, you can come in here and look at the particular stocks if you want to. And that should wrap us up. Let's not forget, I have not updated this one. So let's not forget hotel, restaurants, and leisure, and some of the other spaces that we want to focus on. This one's not going to update for me quick enough, but I'm going to go ahead and wrap this up and we're going to call it a day. I will get out the stock review setups and the ETF setups here hopefully before open tomorrow. Hope everybody has a great rest of the weekend, and we will talk soon.